Yeah, morning traders and welcome to the new trading week ahead. If we have a look at the backdrop which we've been set, I guess on balance it is conducive of further risk taking and people looking to chase alpha in this market. We have a look at the volatility markets. We can see the VIX trading at 12.46%. That's where it closed on Friday, which gives you obviously very low implied moves playing through over the week. But I guess when you're having a look at how vol's realising, if we have a look at 20-day realised volatility in the index S&P trading around 11%. It's no surprise that people are looking to sell volatility in this market. We can have a look at Treasury, US Treasury implied volatility and have a look at the MOVE index, which is currently trading around 107. And if that continues to gravitate down towards 100, then obviously we're going to see broad risk taking coming through in markets. And that's probably conducive of what I believe is likely to be the path of the 10-year Treasury, which is probably likely to trade in a sort of 460, 435 range for the next week or two. If we have a look at FX vol, you can see that the JP Morgan FX implied volatility in G10 currently trading around 7%, which is the lowest levels of the year. So people aren't expecting big pronounced movement playing through and across the G10 pairs. And as you can see here, most of the expected movement across the different pairs is somewhere below the 20th percentile playing through. And I think that's probably conducive of how vol's realising, but also the expected or event risk this week is not really any kind of major tier one landmines playing through. Now, if we have a look at rate expectations, we'll look at this in a bit more depth in a minute, but if we have a look at 1 year forward rates at the moment, you can see that 65 basis points of cuts are being priced into US rates over the next 12 months. In the UK, we've got about 40 basis points of cuts being priced in Europe, 75. It's the most pronounced situation there. In Australia, we've got 9 basis points of hikes playing for expected over the next 12 months. In Canada, 69 basis points of cuts, New Zealand 42, and Japan expected to raise rates there. So I think that is already priced into the FX markets, into rates, so that obviously needs to be considered. And also positioning as well, while the commitment of traders report does get a looking. If we have a look at investment bank flow reports, which I have obviously put a lot more weight on than the commitment of traders report, leverage funds, which I think are obviously the ones you want to look at because they're the fast moving entities here. They're running a very large short euro position, large short yen, CAD and Swiss franc position, notably in that situation as well. And actually after the dollar index has fallen 3.5% since through November, it's actually real money accounts that are short. The rest of the market's still a little bit long of US dollars. Now, what are we watching on the week in terms of asset markets? I think certainly as markets get underway after the Thanksgiving celebrations, we're going to be watching that US 500. Can we push above 70? I think if that can break through those levels driven by tech, then I think people are going to be chasing risk, and the Nasdaq through 16,060. I think that could be a big line there to sort of take us higher into December. We've got the dollar index. Can we push into 103? Obviously, that's going to be driven by euro dollar. Can we break 109.60? If we get a break of that, that could be a strong continuation of what we've been seeing. And Aussie dollar's been a good performer last week, up over 1%, but we're testing that 200-day moving average. Can we break through those levels in earnest as well? And cable, obviously, strong performer recently. Can we kick on from 126? Bitcoin 338,000 I think could get quite looking as well, although I'm not sure that's going to have too much around that. But this idea about running a continued short US dollar position, long equity exposure, that's going to be something we're watching this week. Now, in terms of event risk to drive, if we go into the US to start with, we do get a number of central bankers. We've got Goolsbee, Waller and Powell speaking. I'm not sure we're going to learn new from that. And then on the data front, we've got new home sales, house prices, consumer confidence, claims, PCE inflation, which I think could be probably one of the bigger, more important events, where the headline's expected to drop to 3.1 and core at 3.5% from 3.7. And then ISM manufacturing numbers coming through later in the week expected to be somewhat less bad at 47.7. So still contraction, but a slower pace. And if we have a look at US rates, markets and swaps, we can see that nothing's really being priced for the December meeting or January meeting. We go down into May and we've got the door open for cuts there. We've got 13 basis points of cuts, which is about a 50% chance of a rate cut by May. It does feel a bit early still for May to be a live event. But then June, we've got a full rate cut being priced in. And as I say, you go out to November, we've got nearly 70 basis points or nearly 3 rate cuts being priced in there. If we go into Australia, I think that's going to be an interesting one to watch this week. On Thursday, we've got the inflation numbers coming through. The monthly CPI numbers expected to drop from 5.6 to 5.2. The economists' range are fairly quite wide, actually, to be honest. We have a look at Aussie rates pricing, and we can see the February meeting is a live event. We've got 13 basis points of hikes being priced in there, so that's a 50% chance there. So this CPI number could sway the dial in that situation. Of course, that would mean some volatility playing through in the Aussie crosses, certainly against Aussie Kiwi and maybe things like Aussie CAD and Aussie Euro as well. So something we're watching there. In the UK, not a huge amount to watch. I think you're probably going to be watching more what the Bank of England meeting members are going to be saying. As you can see here, we've got Ramsden, Haskell, we've got a couple of other speakers to play through. And if we have a look at UK rates, there's not really much being priced in. Obviously, the next debate is really about when they cut. So no real hikes really being priced in. But you go to August and June and August, and the market's starting to see rate cuts being priced in there. Are we going to see, as I say, cable continue to kick higher? In Europe, we've got the CPI numbers playing through later in the week. That's something that could drive a situation where the market's obviously short of euros and also pricing in quite a lot of rate cuts. As you go into the individual swaps market in Europe, you can see no real hikes being priced in, but we can see the first real cut really being started to be priced in by April. So in that situation, you've got the ECB expected to open the door and be more aggressive than most central banks, but also start their cutting cycle slightly earlier from that situation playing through. Now, apart from that, we've got an RBNZ meeting later in the week. No one's expecting anything really from the RBNZ. They're not expected to ease rates or hike or do anything really there. And obviously, whether they live up to the expectations further out the curve, something we're watching. We've got a Swedish GDP number that could be quite interesting. I know we look forwards as market participants, but I think this is going to mark the low in Swedish GDP. It's going to show a technical recession, but I think things will get slightly less bad as we go on. I think Sweden could be a Swedish krona could be an interesting currency to look at later in this week. We've got an OPEC meeting, something we're going to be watching there. The market's not expecting deeper cuts to play through, just an extension of what we've been seeing. So crude volatility could be one to watch there as well. So an interesting week. We are watching that dollar. Can it continue to fall back? Are we going to watch equity markets kick up? That's something we're watching this week. Trade at Pepperstone.